Hey guys, Cam for Investors Underground. Welcome to a guest webinar that we're hosting for around 1 hour with Timothy Bowen. He's a moderator and member in the Investors Underground community, and he's probably been learning from Nate and some of the other guys in the community for around 5 years now. He started off in a different trading chat room, but quickly found his niche in trading the backside of Momo pump plays. I hope you're sitting somewhere comfy because we get to kind of delve into this strategy over the next 60 minutes or so. Really appreciate your time today, Tim. Thanks for being here.
Thanks a lot, Cam. So this is a replay of a webinar from last week. I actually kind of goofed up. We were setting it up last minute, and we got everything working. We were up against the deadline, and then I just flat out forgot to hit the record button on the webinar. So that was a little embarrassing, but fortunately, Cam and the guys at Investors Underground were willing to redo this because had a lot of people that wanted to watch it and just couldn't do it live. So we're going to kind of run through basically what we did last week, and then he'll post it, and that way it's up on the site for future use. So a little background: my niche is I have somehow become kind of the part-time trading guy in the Investors Underground community. So what I do, most of IU is very active traders. A lot of guys that are in and out a lot each day. But I've kind of developed this little niche where I'm not trying to chase every trade. I'm just trying to focus on ideally the best trades. Now, not saying I do that every time, but that's kind of my goal. And by doing that, I've developed this kind of method that seems to be attractive to a lot of guys that are trading, that have day jobs or own businesses, or their students. Seems to be, like college students. That seems to be a common a common niche that I get a lot is a lot of young guys that are trying to not fall into the 9 to 5 and trying to find a revenue stream that they can do without joining, a soul killing day job. So fortunately, I developed this through, I owned a very active business for about 15 years, sold it about 2 or 3 years ago. Had gotten into trading and in day trading, I should say. I'd always been interested in finance, going back to literally elementary school. I'll save you that story, but always been interested in trading and finance. And I did the whole, I always call it kind of the Warren Buffett buy what you know, or CNBC type thing, where you would buy and hope is all it was. You would buy some hot stock, well, not even hot, but some stock that was in a trend that you'd hoped would go somewhere, and I just never made any money. I mean, I'd buy stocks like big name stocks like Apple or GM or food companies, John Deere, whatever. And it would just always be just nothing would happen. And sure, someday you might wake up and there was earnings and they were good, and you'd make a big profit after holding a couple months. But then the same opposite thing would happen. You'd get up some morning and it'd be down because of some negative analyst report or whatever. But I just, for years and years and years, just never made any money. At best, I was break even. And I mean, that's the ironic thing is break even was good. I'd go years, and you get to the end of the year, and it was like, wow, I traded stocks, paid some commissions, and I broke even, and that's a good year. And then it just got to the point where that was so annoying, and I started Googling and looking for other options, and I've always been kind of a contrarian thinker, and always, whether it be music or training, weight training or nutrition or whatever, I'd always just kind of thought the opposite of the crowd. And if I had to have a personal mission statement, it would be the kind of the Mark Twain idea of anytime you find yourself on the side of the majority, you should check your premise. That's paraphrased, obviously, but and short selling was just instantly attractive to me, and I was like, wait a minute, all these times that I was buying and hoping and just sitting there and praying that the stock would go up, I could do the opposite and ignore these quote unquote real companies and hope that they would perform. And I could find these junk stocks that you could see would run up and then fail over and over and over again. It is very consistent and repeatable to find a dollar stock, a $2 stock that has gone from $1 or $2 to 5, 7, 10. And basically, you just kind of wait for the hype to fade, whatever the hot trend is, whether it be, over the last couple of years, whether it be marijuana or Ebola or body cams or whatever the hot trend is. You just kind of wait a few days, a few weeks, or whatever, and you wait for the hype to fade. You wait for kind of the volume to fade, and you just wait for people to give up on it. And that, I'm going back to probably 2007, 2008 when the markets were volatile. And all of a sudden, I got consistently profitable and could sit there and just wait. I wasn't trying to trade 100 times a day. I could just let the trades come to me. I could just put them on my watch list, check on them every day, and just wait for key levels to kind of break down and fade these stocks, and it just worked over and over again. So now that it's kind of changed, and I'll get into that a little bit more. The whole shorting breakdowns doesn't seem to work as much anymore, but now with the SSR and some of these other things, you just kind of short the crazy parabolic moves. And as long as you wait for those big moves and then take quick profits, it's easily repeatable. So that's a little bit of the history. So now I'll kind of get into the how, I guess. So you need to, the biggest thing with part-time trading, it's a double-edged sword, but the best thing about it is, and this can also be the worst thing. I mean, obviously everybody wants to trade and they want to trade, get in, they want the action and stuff. But the biggest thing with part-time trading is you really, really need to focus on entry and need to be willing to miss trades. And there are, I mean, a good trade from last night that was frustrating to me was, Econ. Or no. Let me get there. Enoch. Sorry, I was close. So Enoch is a perfect example of a stock that you need to just be willing to unfortunately miss. Now, I had watched this all day yesterday. Huge run up. It's some junky oil and gas exploration company. So I'd watch it, and I was willing to be patient. I wasn't going to short it at 660. I wasn't going to short it at 7. I thought about it at 750, but then it got late in the day, and it was still strong into the close, so I chose not to enter. Now, normally what will happen, and we'll go over a ZFGN, which was kind of the play from last week on the last webinar. Normally, these stocks will push hard into the close like that, gap up, and then you can short them and then fade them just like this one did. Now, unfortunately, this one gapped down, faded all day. I mean, odds are it's going to crack tomorrow and get really ugly, but those are the type of things you have to be able to miss. Yeah, I was ruined the day, and I was actually kind of ornery all day today that I missed Econ, but it kind of happens. You, on my second bullet here, you need to be willing to miss trades, but nail the entries when they were there. And Enoch, I mean, the entry would have been a gap up parabolic today. And then, I mean, the risk to reward would have been so much better. So now, ideally, what I am explaining, detailing, or whatever is not your primary income driver. Now, if you look to or want to trade every day as a career, as a job, There's a lot of other guys in the IU community that do exactly that. And I mean, Nate's a perfect example. I mean, that's what Nate is doing every day. He's showing up and he's working every day for a paycheck. I am more inclined to just wait around for some of the easier profits and then not trade every day because I've got other sources of income and I love trading, but I don't like, it used to be I wasn't able to because of owning a business. I wasn't able to sit at the computer, stare at screens 7-8 hours a day. Now I sold the company and now I just don't want to stare at monitors all day long. It's just not what I want to do. Even though I love trading, I love getting away in the middle of the day and doing other things, whether that be hobbies or business things. So the idea, what I'm going to go over is focusing on entry and hopefully taking the easy profits. So I'll get back to ZFGN in a second, but as a part-timer, overtrading and forcing trades is your number one enemy. There should be no reason for you to chase entries or try and overtrade. I focus on 0 to 3 trades a day, and that's it. Types of setups. There's 2 types of setups that I've traded for, 7 to 8 years that, in my opinion, are the 2 most consistent. Now it's, again, I'm the contrarian guy and I focus on short selling. You can kind of do, I'm not going to go over it, but you can basically flip these setups. I mean, I like to short parabolics at the open. There's a lot of guys that like to buy breakdowns at the open. I mean, it's basically the exact opposite setup. But what I love about short selling is I like to short into spikes so that it gives me a set risk to reward. So that when a stock spikes from 2 to 6 and starts to fade, I start shorting. I know that 6 or the new high of the day or whatever that level is my stop. And what I'd struggled with for years is with being long, it's just so much easier to kind of believe and wait and wait and wait. And I hate non-working, sideways, grinding you down trades more than a huge spike or drop that stops you out instantly. I would rather be stopped out right away, move on, focus on other trades than take the grinding trade. So I focus on parabolic shorts out of the open. These are stocks that are like ZFGN the other day that was up huge. Day one, it was up big, kind of pulled pre-market, then rocketed up the next day, and you've got set risk at whole dollar amounts. Now, I didn't trade it this day. I traded it the next day, but it's a perfect example of this. You get this day one move that you can short into a parabolic. I mean, you can see parabolic's an often confusing term, but you can see it when you zoom in and you're looking for, there. What you're looking for is candle, 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 boom, huge candle. Okay, this is the parabolic move here. Then what you're doing, what I do is I just set risk at whole or half dollar amounts, which is what a lot of guys do. But I look for that parabolic move. I look for that squeeze out at a whole dollar amount, and then that's where I look to short. So what I say when I say parabolic move out of the open, I want a lot of pre-market activity, a lot of volume, and then a huge move that then gives me a whole or a half dollar amount to short against as risk, and then you let it ride. So, So that's kind of, and I'll get back to ZFGN and how I traded it, but the other setup is what I call a late day HOD reject, which I'd been doing for years and never really had a name for it, but it is what the Emil Kuzmain on Twitter, he's actually doing a webinar right now, I think, as well, and he's done several that they're very he does a great job of detailing it. So I'm not going to go over it again. I'll focus on the parabolic short that was ZFGN, but watch Emil's webinars because I think they're very useful for a part-timer as well. Because what it allows it to do is, if you're busy in the morning, if you're busy during the midday lull, he shows how to, how to trade these big runners and then set risk at the high of the day and wait for that stock to kind of bounce off that and then do a late day fade. I used to call it a late day fade. It was a trade that I'd done many a times. I did it on FIT today, as a matter of fact. Was no great profit on FIT, but I waited for this I wasn't even following it this morning. Nate alerted it to me. Big pop out of the gate, fade, and then it ran up to this 750 level, and that's where I was like, it was kind of a slow day, and I was like, listen, I'll short pops on this. So as it faded and then popped up here midday, wasn't quite a hard reject. I mean, normally like a little more of a move, but I shorted into the spike and then faded it into the close. I was hoping for a lot more. Thought this thing could really unwind, but and it just pulled right there right now. But I got 20 or 30 cents, so it was a good low risk trade with set risk. So, but I'm not going to focus on those that much because Emil does a good job at that. So, what I am good at, I'm going to focus on what I'm good at and what I'm not good at, and I see this with a lot of part-time traders. So, and these are things that I think that are useful to learn, especially for a part-time trader. You need to get diligent and disciplined in creating a plan. It's especially, I think that one thing that a full-timer and a guy that is locked into trading has is you're staring at every tick, and it's a little easier to not let things get away from you. Now, as a part-timer and as a guy that's walking away, you can't ignore what a stock is doing. I mean, these are volatile stocks. That's what we want. We want $1, multiple dollar moves. We want these stocks jumping around so that we can make profits and move on and not wait for weeks or days or whatever. But you need to go into these with a plan. And I do. I mean, I use index cards because then I think there's a benefit to writing things down. So I will pick my entry where I think a stock is a good short. So we'll go back to ZFGN. And I was looking at this on this day. So I'm watching it here the previous day, and just it spiked and then faded, and I missed it. And I was like, whatever. I kind of moved on. So the next day, I get up early, and it's here at 5 a.m., 6 a.m., this thing's gapping up. So where I look for it is I'm thinking, okay, there are, and this is where you get experience, but you need to remember there's two sides to every trade, and you need to put yourself in the mindset of the guy on the other side. Now, there's obviously not one guy, but there's a herd of guys, and herds tend to think alike. So I'm seeing this thing moving up on, it's some obesity drug that had positive news, but I mean, literally it killed people a few months ago. I mean, it's like, this thing, I just don't believe in any obesity drugs, so that's where I'm skeptical. But I'm thinking, okay, there's guys that were shorting into this pre-market, thought they got saved, it gapped up huge, they thought they got saved again, they're holding this thing for what they think is going to crack. Now pre-market, it's squeezing them, and they're thinking, man, this can't possibly take out the high of the day at 12 the day before. So that's where they're thinking, okay, that's my oh shit handle. That's where I'm going to stop out. So it runs through 12 and basically parabolics. So this is where the luck came in. I thought about it at 12, but then I was like, you know what? It's still early. It's still like 8 a.m. right here. I'm just going to set an order at 12:50 and see if I get filled. So I get filled at 12:50, and now I'm in the catbird seat, in essence, because of the fact that I was selective on my entry. And what's the most important thing about part-time trading? Picking a solid entry. So I'm now happy. Okay, I'm at 1250. I write on my index card that I've got to stop at 13, because if it gets to 13, then you now see back on the daily chart, it's got potential to go 15 plus, and it could really run, because once it gets through that whole dollar amount, that's where the believers are back in and things going to get ugly. And it gives me a controlled risk, because I'm willing to risk 50 cents on this starter entry. If it doesn't work, so be it. I move on. But if it does work, like it did, I ended up covering in the low nines for $3 plus a share. And it was pretty cool. This happened on the exact day that I did the webinar, because this is like a perfect example of a part-time trade where you can set a entry with where it's parabolic, where it's a squeeze type move, where you are confident that shorts are going to give up, or you're confident, not just shorts, there's longs. Remember, there's guys 2 days ago that were probably bag holders at $5. They're selling at $12.50. They want the hell out because they just got saved, okay? And the beauty of it is, I could just put this thing on autopilot all day and just let it drop. Now, obviously yesterday, it hit the sevens. There's really no reason to cover in the nines. I just was like, you may have a different thought process, but when I'm up $3 a share in one day, I gotta cover. Now, there's other guys that have a much longer time frame. There's a good chance this thing goes all the way back. You can see on the daily, every day, there's a little bit of green candle today, but every day is just red, fading volume. And if it cracks 750, it's going to be 7, it's going to be 6, and couple weeks from now, it's going to be right back where it was. So, back to So that is what I am good at, is creating a plan and focusing on a handful of stocks. And what are those handful of stocks? They are the most active stocks. This is something that I learned, not only the biggest thing I learned from Sykes as well as Nate would be the focusing on only the most active stocks. There's just, it will crush your soul to sit here and wait for non-moving stocks that you're in when everything else is moving and working. It's just only focus on the biggest gainers of the day. Every day, I'm looking at the previous day's biggest gainers, the previous week's biggest gainers, and I am focusing on short selling those junk stocks. So what I'm good at is shorting. I do my best to avoid going long. I will occasionally, the one thing that I think works, that if you can be around at the open, is the big trend is low float runners. If you can be at your computer for the open and a couple hours after that, low float runners work too, but I'm shorting 99% of the time, because I know consistently these junk stocks that have run up 50, 100, 1,000%, whatever it is, will retrace and give me a set risk at a previous high or a whole dollar amount. So I only look for 0 to 3 trades a day. Again, I'm assuming you're interested in this webinar because you have a job. You're a programmer and you can't stare at the screen. You're a student. You need to get to school. you're a tradesman and you can be around in the morning, but you got to leave all afternoon. Maybe you're West Coast and you've got a day job, which to me is perfect setup for a part-timer. I mean, if you've got a job that you start at 9 or 10 a.m. Local time, like Pacific time, or say you're, even further, back in the time zone where you can get up at 4 or 5 a.m., get a trade plan together, trade till 10 or 11 your time. You catch the best part of the day trading, and then you go to work and move on. So you can't try and focus on 10, 15, however many tickers. What I do is I look for the biggest gainers that are junk stocks. Now, define a junk stock. My fundamental research is probably a little amusing. Maybe guys will laugh at it. I don't know, but basically what I'm doing is each day I'm looking at the biggest percentage gainers, and I'm just looking to see if they are quote unquote junk. So another solid trade I made the other day was TROV. So this to me is what I call a junk stock. So I go through the percentage gainers and I see this thing up huge the other day. So I bring it up on Yahoo Finance, which I think is still, basically the best tool out there for finance news. So this thing's up huge in one day from $3 to $5 based on a urine test for cancer. So whether or not that's real, I don't know. Maybe 5 years from now we'll find it's the greatest thing in the world. But I'm instantly skeptical when you're taking a urine test for cancer. Then what do? I jump to their Yahoo Finance page and look at their financials. Okay, they got $280,000 in revenue a year. Okay, how are they going to support a CEO that makes $600,000, a CPA that makes $300,000, and their chief science officer? I mean, they got millions and millions of dollars in payroll, and they're bringing in $280,000 a year at best. They got crazy amounts of debt. Their balance sheet's a mess. ZFGN is another example. I think ZFGN had actually zero revenues. Correct. Okay. ZFGN, this fat loss pill that I successfully shorted last week, zero revenues. Never had any revenues. This now perks my interest. They've got 40 employees. Lots of times you'll see stocks that are up huge and have 2 employees, 3 employees. It may sound silly, it may sound ridiculous, but if a company has 50 or less employees, they're marketing fat loss pills or they're marketing urine-based cancer tests. They've got terrible revenues, and their stock is up, double, 150%, 200%. These are consistently going to retrace. And you can see that with Trove. TROV has this huge one-day run-up. Next day, you could have shorted right at the open at 540s, 520s, and now it's at the 4s. And a couple days from now, it'll probably be right back where it was. So only focus on the most active setups, biggest percentage gainers, then whittle out the quote-unquote real stocks. I mean, if a stock is up 100% and they have $10 billion in revenue, they're in a real industry. I don't know. They make car parts. People buy car parts. I mean, it's something real, something you believe in. I'm not interested in that. They got 1,000 employees. They've been around. Move on. Only focus on the junk stocks. Then look to find solid entries. So at Trove, whether that be, Trove was a bummer because it was basically a one-day runner. I'd like to focus on ZFGN simply because it was it was a 1-day runner into the next morning that then just had a quote unquote blow off top that then gave you a solid place to enter. So I avoid shorting stocks on day one, no matter how junky they are. Now, if they get ridiculous, I will look to enter those, but only at my price. And that's a question I get a lot. They'll say, "Well, what's your price?" I'll put that on my blog a lot. I'm like, I'll be like, "Okay, I will short this if it comes to me." And what I am thinking there is I want an entry that I know that shorts are in pain. I'm picking an entry that I know longs are probably taking profits, and I feel like this is a solid entry. If it goes against me, I'm not going to say, "Fuck, why did you short it there? Why did you chase? Or why did you short it when it was up 50% when it has a history of running?" So I what has helped me so much over the last couple of years is just sitting back and being that selective, disciplined trader that will only take it if it comes to me. And you know what? If ZFGN didn't hit 1250 and say it ran to 1160 right here and then faded all day, so be it. You know, I wanted it at 1250 because what will happen, especially in this market, if you chase shorts or even if you chase breakdowns, I mean, if you chase anything, odds of success is exponentially worse. And you can just sit there and wait and set targets. And if they come to you, you will, in my opinion, for me, and I've seen other guys, is you will invariably manage this trade better because you let it come to you and you weren't trading someone else's plan, or you weren't like, "Oh shit, I'm going to miss this. I got to get in." Then it spikes a little bit against you. You cover or you sell and you're pissed off because you chased. And then invariably it would have worked had you chosen a better entry. So focus on entries. Now, what am I not good at? I struggle with FOMO, the fear of missing out. I've been preaching for half an hour about not chasing. I still chase, man. It still happens. The bummer is chasing junk stocks does work quite frequently. I mean, if they're fading, you can chase, and especially late day, you can get that stuff to work. I don't recommend it. Avoid it. You know, just focus on your best possible entries. And then what I really struggle with is just sizing in. So infrequently do I ever really hammer a stock. I mean, there's so many guys in the IU room that are way better than me because they have so much better conviction. When they take a trade, they will hammer the thing. So, but what I try and focus on is only adding to winners. And then when it's working, that's when I'll hammer a stock. There's no reason, especially as a newer trader or as a part-time trader, never add to a loser. I mean it works. I mean, you'll get saved, but being consistently profitable really means just never adding to a loser, unless again it's just some bizarre setup. So now I'd like to kind of get into, I touched on this a little bit, but the anatomy of a trade. Okay, how do I trade part-time? So I went over this a little bit earlier, but I just watched the biggest gainers for the previous day or pre-market. It has to have big moves and big volume. I mean, if the thing's up 100% on 50,000 shares, I mean, I'm not interested. I want a million shares, couple million shares, because if you get into a thin stock with a big spread, you'll just get squeezed out, or it'll drop, you'll sell, and it'll jump right back. Focus on big volume and tight spreads. It's so difficult to day trade huge spreads. So then what I do is I just bring up the daily chart. Now I use stockcharts.com. There's a million different ones, but I just, for whatever reason, have been using it for years, and I just like the looks of the chart. So I bring up stockcharts.com, say I'm back here on this day one, and I see this huge rip from 750 to 11 or whatever it was. So now on the daily chart, you can kind of see what I was thinking. Now, the nice thing about the daily chart is it doesn't have pre-market. So you can see where I got my 1250 level. It was basically just kind of back in here to where it gapped down and then pulled, kind of got up in this area. And then that's where I'm thinking where the bag holders, and this is not science, don't get me wrong. This is where I'm thinking, okay, the bag holders are going to sell and the shorts are going to give up. So I set my order at 1250 and it obviously worked. Now, they don't always work like that, but Trove, here's day one. I mean, you have this huge candle. Now you can look to short this the next day if it starts to fade. And you have a stop, a very nice stop at 6 here. I mean, you've got this kind of level here where if it gets through 6, it's a good chance to run. Back here, last October, you've got 6-ish range. I mean, if it can get through that, buyers are going to come in because they're going to think that maybe they can make this bag hold work. Shorts are going to get squeezed. So it's a good stop. Now, otherwise, this one worked. You can get short that next day, ideally into a pop. This one never popped at all. And then you can just ride it for multiple days and fade, fade, fade. So that's where I bullet point 3 here is I try and put myself, as I'm going through these charts, normally there aren't that many. That's the beauty of it. I mean, I get up early. I get up at, excuse me, 4:30 in the morning, but it's just because I like to get up early, and you don't have to. I mean, really, you do need to be up, in my opinion, you need to be up at 7:30 Eastern time to get ready, but you don't need to get up as early as I do. I just like to do it so I can take my time. I can go through those big gainers. I can find my junk ones. I don't want the real ones. And then I start looking at the charts and I put myself in the mindset of the shorts and the longs and just try and pick out these key levels where I think guys are going to get squeezed or guys are going to be willing to be happy with the profit and cash out. I then set alerts in Thinkorswim. I think it's a great tool for a part-time trader because they have Thinkorswim, as far as I know, it's free. I've never gotten charged for SMS alerts. You can do email as well. But what I do is I set alerts at key price levels. Like you can see, this is an old alert from, I probably set this, this day 2, the day I traded it. This was probably my stop loss. It's probably what it was. But you can just quickly right click, set alert, and then pick a price level and have it SMS you, send you an email, whatever. And those are my entries because these are the points where I want to get short. Now, not saying every time I get an SMS, I short it, but those are the times when I run back to the computer. Or if you're doing a day job, say you're a programmer, whatever you're doing, you hear that bing from Thinkorswim. That's when hopefully the boss isn't looking or whatever. You jump back over and you reassess and decide if you want to enter this trade. Most of the time, excuse me, if it hits my alert, then I'm looking to start into that. I don't believe in getting too big too early. I like to short spikes, but you never know where the spike is going to end. So I usually trade in quarter size positions. So when that alert goes off, I enter my starter size. Then I reassess. Then I get out my index card. I write my plan. Normally, I like to add higher or add lower. Okay. Now, that may sound kind of funny, but I mean, I'm willing to add up to wherever my stop loss is, wherever that breakout level is, wherever that point is where I think the momentum is going to shift the other way, where everybody's going to believe and the shorts are going to get squeezed and it's going to move away. I will add into that. Or on the flip side, what I prefer is to add into a winner. And as that stock breaks down, I'm shorting pops as it fades. ideally holding all day and then covering into the close because I hate overnight risk. Or worst case scenario, normally if it fades all day, you'll get a quick washout in the morning, you cover into that and you move on. So I never chase. If well, I shouldn't say never. The goal is to never chase, but I focus on only entering a trade at my point. And if it breaks and runs away without me, then so be it. So I kind of got ahead of myself, but I start small, a position size that even if the stock goes crazy, it won't hurt you. Because again, I like to enter and do what I like to let things work themselves out. Okay. So I may short at my level, but it's still on the way up. So I still like to set an alert and thinkorswim at my ultimate stop loss. And then I like to do other things or walk away and have a size that I know that even if things get crazy, it's not going to ding my account. It's not going to hit my oh shit handle. Then give it some time to work out, especially when it's early in the morning, and then start looking for things to go your way and add into winners. So what I look for is that topping action. And I'm not necessarily watching every tick, but if a stock hits my entry, continues to move, I will let it bang around, put that topping action in. Then once I have that clearly defined stop at that topping action where it acts like it just can't go any higher, then starts to roll over, that's where I'm looking to add. Now, quite frequently in these stocks, it will collapse before you can add. That's one of the most frustrating things is quite infrequently do I get to the size I want to be on these faders. But you know what? ZFGN is a perfect example. I never added to that thing, but $3 a share on a starter entry, I don't think anybody's going to complain about that. Now, should I have been adding to that? Yeah, but I was kind of busy. I was trading other stocks. It had this huge pull out of the gate. It went from 12 to the low 10s. I was just like, man, it's pulled so much. I can't add. And then it just kept cracking and cracking and cracking. Now, that's a unique setup. Those aren't going to come along every day. But if it collapses before you add, so be it. A profit's a profit. And even on a starter entry, if you get $1 plus, if your starter entry is, say you got a small account and you're starting out with $100 or 100 shares, if thing cracks $1, $1.50 in minutes, an hour, I don't know many guys that are part-time traders. They're going to be upset with $150 in their pocket. So, my profit is dictated by a couple factors. Primarily is the plan. If it works like you thought, take your profit and move on. If you think it's going to pull 50 cents and it pulls 50 cents in a minute, take your profit or take your partial profit and just move on because it did exactly what you wanted. These are volatile stocks. There's no point in hanging around. KMI today is a good lesson. I had this. I traded this poorly. I had this short overnight in the low 15s. And you could see yesterday it faded all day, and it closed right at low 14s. I'm up $1 a share, and I'm thinking, man, this thing is going to collapse. Now, the dilemma is it's a real company, okay? And it's tied to oil. So what happens? Oil ran today. I got squeezed out for flat. I should have, I got this pull. I should have covered into the close the day before. I had $1 a share. It's kind of silly to want more, but I got greedy. But what you need to do is my plan was to cover in the low 14s. I didn't follow my plan, and look what it does. I go from $1 a share to flat. I basically covered, right here with minutes to the close at 15. I lost, I think, $50, but I could have had a very nice profit had I followed my plan. So in volatile stocks, if your plan is with KMI, my plan was to take $1 a share. Should have took it. That's the mistake. Um, Also, I focus on time for trades. I am very impatient. It's difficult for me to manage multiple trades. The longer I have a trade, if it gets hours, days, I just can't take it anymore. And the overnight risk is just it's just not worth it. It's so much better if a trade works. You're getting into the close. You're profitable, even if it's small. Just take it. Uh, I try and avoid adding or entering new positions during the lull. I think this is very solid for part-time traders. I think it's very easy to kind of sit down at the computer. You've got a little extra time midday, enter a trade, and it's just avoid it. It just now if I'm in a trade before that, I will add to a winner during the lull, but I will never ever add to a loser during the lull. It's just that's the worst possible time to add. And when I say lull, it's that 11 a.m. to 2 p.m. window Eastern time. So then once 3 p.m. comes around, I am planning an exit. I despise overnight risk. I've got many hobbies. I love spending time with the family. I just want to get away at 4 o'clock and not worry about trades. Um, it's just not worth it to sit there and look at your phone every 5 minutes to see if the stock is going against you. And also with these volatile stocks like ZFGN, they'll so consistently spike pre-market, spook you out, and then the trade ultimately works. But you can't. I would so much rather have done what I did and short into that big spike as opposed to hold it overnight, be adding and then hoping it works. Which sure you would have gotten saved on ZFGN, but again, it's a unique setup there. So, and I just really every day I trade so much better when I come into the day with a clear head. Whether or not I was green or red the day before, I trade so much better when I just don't have baggage from the previous day. Now, sure, you get up and something gaps down and it goes your way. Obviously, you're in a good mental state, but it's just not worth overnight risk. Avoid it. So, so why short selling? I got into this a little bit in the introduction, but so many of these stocks spike and then sell off hard over and over. I just don't think to try and I don't think there's several philosophies. There's the buy the breakouts philosophy. There is the buy the washout philosophy. I just don't think any of these methodologies are as consistent as shorting stocks that are up ridiculous. Now, you have to have a rigid stop. You have to wait for entry. All these things I've gone over. You have to avoid day one. You have to wait. It's annoying waiting around. But you will find the more you follow these ridiculous runners, the more consistent you will see that that they will spike and fade over and over again. And what I hate about buying, going long, is I think I'm not the only one, but it's so easy to just be like, man, they had a press release last week. They'll have a follow-up press release, or they're not going to let their stock fade all the way back. They'll have a conference call. They'll do all these things, and it's just so easy to be a bag holder. Where one of the best things about short selling is if you're a bag holder as a short seller, you will not be around long. You cannot let stocks go against you day after day after day because you'll be broke. You'll be out of business. Your account will be blown up. It sounds ironic that that's what I like, but I like that. I know that if I'm getting squeezed into the close, I'm an idiot to hold this stock overnight because odds are it gaps, rips me out, and I'm in a world of hurt. So I like that I am forced to make a decision based on the fact that I am short and I have the unlimited potential for losses. So now that's kind of how I trade. These are the things that I think that help me excel. Not that I do my best. I'm not saying I excel, but these are the things that help me trade my best. And these are things that I think that are useful for every part-timer. You got to get up early. Or, I really think that there's no benefit to doing this stuff at midnight. I would rather see you go to bed at 9 o'clock and get up at 6 a.m., 5 a.m., 4 a.m., whatever that is. A lot of the news comes out overnight. Okay, a lot of you're there. I'm building my watch list during pre-market activity, so I know that stocks that if you were screening for them at 5 o'clock or midnight or whatever, I now see some pre-market activity. I just know if they're off my list, I can just ignore them. So I prefer doing it early. You have to create a watch list and a plan. Do not wing it. If you try and wing these trades, you'll make the wrong decision over and over again. I believe in getting up, getting after it, working out, getting good breakfast, wake up your body and brain, get showered, get dressed. I know the beauty of being a day trader is you can do it in your underwear, but I also think you need to be a professional, not a gambler. Okay? Gamblers trade in their bathrobe. Professionals get up, get ready, get showered. One of my favorite lines from Nate is look sharp, trade sharp. Okay? Don't show up in your underwear. Get ready. Treat it like a professional. You're not a gambler. Professionals don't show up in their pajamas. So I then write out the trade. I set my alerts in Thinkorswim, and I keep that plan in front of me. I do not justify or deviate. Now, I shouldn't say never, but I don't justify or deviate when it comes to chases. Now, if this stock is on my short list and it blew through my entry, I will modify my plan higher or let it set a top and then short into that risk. But I will not modify my plan to chase just because something is breaking down pre-market or right out of the gate. Let it come to you. Don't chase. And then at the end of the day, review trades. Again, be a professional. Think about what you did and what you could have done better and how you could have maximized your profit or how you could have covered your loss earlier, what you did right or wrong. So one of the questions that I frequently get is a lot of guys join the IU community and see, I mean, it's a very active chat room. Now, the best part is by far the most professional and most focused chat room I have ever been in. I don't think anything like it exists on the internet where it is pure business and it is purely the most volatile, most active stocks, which is exactly what you want as a part-time trader. You do not care about, low volume, huge spread stocks. You want the stocks that are moving, and you want the stocks with volume. So a lot of guys will join the IU community and say as a part-timer, and they will see a lot of activity there going on, and it may seem a little overwhelming. But what I do, and what I think, what the best part about the community and the chat room is you've got 700 eyes watching only the most volatile and only the best tradable stocks. So when I go in there, I'm not looking to join trades or follow trades or anything like that. What I love about it is I don't need to sit here and run equity feed and constantly refresh the hot list and all these things trying to find the hot stocks. I know that if it's alerted in the IU chat room, it's a tradable stock. And the beauty of it is what I do, and I think this is extremely, very useful for a part-timer. And this is actually how I got started with Investors Underground was I was a subscriber and would never even use the chat room. I would only use the overnight scans. I think Nate is exceptional, whether you're long or short, at finding the best setups for the next day. And I mean, I've read his watch list every night for 7 or 8 years, maybe longer. Basically, as long as he's been doing it. I then take those, look at those charts, look at his comments, build that into my model and my watch list. Then I use the chat room as a way to know when these stocks are tradable. Again, if you've got a job where you're at a computer, you can have that chat room in a side window. Maybe you got multiple monitors, whatever. You can filter the chat for only the moderators, only the guys that are trading the stocks that you want to trade. And you can just sit there and watch it out of the corner of your eye, and you will know if that stock is blowing up, breaking down, whatever. There is no better screener, in my opinion, than the Investors Underground chat room. There are guys in there with the news way before you'll ever see it. There's pointing out stocks that are moving for a reason. They're going through key levels. It's a huge resource for somebody that can't sit there and be dialed in and sit there and run 6 different scans or sit here and refresh news feeds or refresh Twitter nonstop to find what the moving stocks are. And that's what we want. We don't want to trade stocks that aren't moving and stocks with no volume. So as a advantage, I think there's no better community, there's no better group of guys for advice, for mentorship, and for finding stocks not only just the day before, but during the day as well. So there's a couple tools that have been that I was actually been jonesing for years that and that actually kind of bugged Nate a little bit was kind of releasing a longer form tool to kind of figure out how he thinks and how some of these more active day traders think. And and actually on my blog you can search it. I've done very detailed reviews chapter by chapter of both of the DVDs, Textbook Trading and Tandem Trader. So you can kind of see what the contents are. Now, by reading my blog, you won't get any of the learning. You still got to watch them. But if you're curious what's in there and what each chapter covers, I kind of break that down. So you can Google that, or I could always post them if you want to ask me where they're at. But one of the biggest things that they had helped me with was how to, for me, I struggled for years with how to manage a trade. I would always, especially in the early days, I would quite frequently chase, and I would use inefficient size, and I would let stops get slippery, I guess I would call it. So what the biggest thing I learned in the DVDs was how to wait for better entries based on, say, the parabolic short or the ABCD setup or these different types of trade setups, but then also how to then apply those setups to pick a better stop. I back in the early days, I would always struggle with how to pick that area to stop out at and how to build that trade model and build that trade plan. I guess that'd be the biggest thing I would say I learned is how to look at this trade and say, okay, what's going to happen if it works and what's going to happen if it doesn't work. And I had never really got that far before the DVDs. I would just say, this stock's breaking down, I'm in short 3,000 shares. And I'd go all in. And quite frequently it would work. And it would break down and you'd have a good profit. But then what would you do when it went against you? And also a huge thing was scaling in. That is something, like I mentioned, I would quite frequently just go in huge, because quite frequently it works. You would get that pull on a short seller, you'd get that gap on that breakout on a long. And something that I learned was how to now look at this trade bigger picture, line up the multiple time frames, take the daily chart, take the 5 minute, take the 1 minute, and now create an actual trade plan. And how are you going to manage this for adding into, say your plan is to add into spikes. Where do you add into spikes and where do you stop out? Or if you're doing a high a day reject, where you're adding into these breakdowns at whole dollar and half dollar amounts, and you're finding you're seeking out the stops of some of the long traders, and that would be by far, if I had to sum it up in one sentence, the biggest thing I learned from these DVDs was thinking about the whole trade and thinking about a plan, and not just, excuse my French, throwing shit at the wall and hoping it works. Tools. So this is kind of last slide. Brokers, you have to have, in my opinion, if you're going to use this strategy, you need to be able to get an account with IB or Centerpoint. Those are nobody's perfect, but those are the best short selling brokers. They're not always going to have borrows, but most of the time they will. Things have gotten a lot better. I mean, it used to be back in the old days, it was such a pain getting shorts. Now you can almost always get them. And then Thinkorswim, I'm pretty sure you can still open an account with a couple $100. I've had only a couple $100 in Thinkorswim for 5 years. They haven't charged me a single fee. I use it for charting, but I mainly use it for the alerts. And then scans, I use stockfetcher.com. There's a million of them. There's FinViz. There's just Yahoo Finance. You can use anything. I like Stockfetcher. I've got several scans that I post on my blog. And then daily charts for the big picture. I use stock charts. Nate uses big charts. There's a lot of other ones. And then in closing, just keep it simple. Don't try and use all these platforms and all these charting packages and all these scanners. You're really just looking for the biggest gainers that are junk stocks. Because in my opinion, short selling, huge gainers with no revenues, shady pass, sketchy details is the best way to trade 0 to 3 times a day, maybe 0 to 3 times a week, and make consistent profits. I mean, it is very reasonable to have a average size account and make $1,000, $2,000 with this strategy a week. Now, is it easy? Are you going to be able to watch this webinar and do it tomorrow? No, but I'm telling you, if you learn it, if you get a system and you become a professional and disciplined, there is no reason you can't have a very repeatable side business that could equal the income of what a lot of people bring home a year. I mean, it's very reasonable to trade part-time and make 50 grand, 100 grand, even more. But even with a small count, there's no reason you can't make 250, 500 a day consistently. So that's kind of the rough introduction of what I do on a daily basis, what has worked for me through the years. If you have questions, you can visit my blog. I've got a contact form there. You can follow me on Twitter. I'm usually very responsive. You can DM me on Twitter. You can contact me via the contact form on my blog, and I return every email. So, Cam, did you kind of have any kind of follow-up questions for me?
Yeah, I know that you're a pretty active blogger, and we've just set up a little section on the Investors Underground website, www.investorsunderground.com/tbowen, where people can go and read your blogs and your thoughts for free. Can you tell us a little bit about that?
So if you guys are, if you are curious in kind of what the setups I am watching, as well as what I like to call post-mortem recaps of trades, good or bad, my plan is to, going forward, I'm posting my daily watch list on the Investors Underground webpage, which is investorsunderground.com/tbowen. So daily, I'll have the stocks I'm watching. Normally, I post that, somewhere between 6 and 8 a.m. So you can check in there if you're kind of curious about the setups I'm watching for the day. Then usually, and I keep saying I'd like to get more active, but usually I post a couple YouTube videos a week recapping the trades of the day. what I was thinking, what worked, what didn't work, and then those will be posted there as well. So you could just follow that and check in there, and and kind of see a daily watch list as well as a trade recap of what worked. And then as I do webinars, if you can't view them live, we'll post my webinars there as well.
Awesome. So we're kind of pushing right up against that 1 hour mark now, but I really feel like we've covered a lot of information in this free webinar. We're going to be doing more regular webinars for members of the Investors Underground community with Tim Bowen, and also there are other moderators who do in-depth webinars to talk about their trading styles with subscribers to the community. Tim, thanks so much for your time. Really nailed it and got a lot of information out in the last hour. Really appreciate sitting down and hanging out with people who want to learn more about trading.
Well, and again, I appreciate you guys, Cam, you and Nate, giving me this opportunity. It's kind of one of those things where I really enjoy trying to give back to the community, because Nate and a lot of the other guys, I mean, Phil, Ozark Trades, Elkwood, Sandro, Splendors, a lot of these guys, those are kind of the main guys I follow because they're kind of the main short sellers. They kind of line up with the way I think. Now, there's a lot of other guys that are awesome in the room, but they've given me so much that I've kind of like to give back to the community, and hopefully, especially if you're a newer trader or if you're a part-time trader, hopefully this webinar has been useful to you. And the goal is to kind of follow these up with webinars on a regular basis. So if you have questions, feel free to send them to the Investors Underground room, or send them straight to me, and I'll help out where I can.